welcome back to another video. Let's get this to 100 likes or 200 or 500 likes, depending on how many views we get. Maybe 20k views, who knows? So anyway, let's begin. So today I'm gonna give you, it's just an edification to what we discussed on previous videos, right? I'm gonna show you exactly how to use support and resistance areas, right? And also how to know where to take profit and also how to anticipate, right? But the first thing, let's just start. Let's just recap because some of you may be new. So if you're new, make sure that you hit the subscribe button so that you don't miss out on any other videos. So if you are an old subscriber, not an old, if you were already here before, I don't know how to call it, man. Welcome back. So, anyway, let's just quickly discuss SNR, right? Let's just quickly discuss how it's formed because it's going to be important for you to know this so that we can be able to explain everything properly. All right, I'm just gonna explain everything here, and I'm gonna explain how to use it rather. Should have just left this one here. Yeah, something like that. Let's lock the phone. Okay. So basically, this right here is your area of resistance, right? And then the one on the right is your area of support. So how do these areas form, right? Let me just quickly label them. Resistance, and then this area right here is an area of support, right? It's Malaysian SNR, it's an SNR. Both of them right here are just SNR, right? SNR. So we're going to explain them in detail, right? We're going to explain them in detail. So for us to create an area of resistance, right? An area of resistance is basically just a barrier, right? A barrier. Or some may call them the roof or the ceiling, whatever they want to call them. But it's just a barrier, like an area whereby prices is not willing to break above, right? So how is this area formed? Usually we see it being formed by an up candle and then a down candle. So how do we mark it up? We mark it up from this first candle right here, right? This first candle right there. This is where you mark up your area of resistance. It doesn't matter if price gaps up on this following candle. This is where you mark it up. You don't mark it up on the highest candle. You mark it up on the first candle, right? The first candle being this one right here, right there. This is where your area of resistance will be. It doesn't matter if it gaps down right here and closes here. This is where your area of resistance will be, right? Hopefully you understood that. But in most cases, you'll find it similar to this one. So an area of support is basically just a down candle followed by an up candle, right? And it's very important that you also focus on momentum, right? But it does not mean that all the time is going to be strictly dependent on the momentum of this following candle. But most importantly, you need to focus on trades which have high momentum, right? So just like with this one, just like with this resistance, it's a buy. So usually you'd want to see something like that, a momentum to the downside, just to show you that price is really struggling to break above, and then this momentum shows that price is willing to go lower. Just like with here, prices it's having a difficult time trading lower, so it got like an area. It's being supported to go higher. So anyway, let me see. How's this? I'm just checking my phone right now. So Ethereum crosses 3,200. Okay, so fine. Hopefully you got that in mind, right? I'm not gonna go into detail, but also remember, don't just use any area that you see. It's also important to know where to use these areas right here. Just because you see them on the chart does not mean you should use every single one. So anyway, let's just continue and get into the video because right now I'm anticipating a sell. Okay, fine. What happened here? We have this daily area right here where we have a buy and then a sell, right? You can see based on this week that price is actually really struggling to go higher. So it even closed bearish, right? Although I did show you an example of a resistance area being formed with a bearish candle closing below this first candle right here, still it's a valid area of resistance just because of this momentum that we seen here, the rejection that we seen here. So what you do in this case, right? If you are a risk trader, right? I always say that my standard stop loss is 30 pips or 35 pips just because right now we are in an area whereby we are still forming an all-time high. So we are not really sure where price is actually going to stop and give us a retracement or reversal. So standard 30 pips. So you could be stopped out. I don't know. You could be stopped out. Let's just say 30 pips is around here. So you just take the trade right there. And then for potential targets always focus on areas of support, right? An area of support would be here. So you would be in a sell anticipating that it would find support from here. Why am I saying here? Because I know you're looking at this candle thinking that it tapped this area, but I don't think it necessarily tapped that area. If we zoom in, as you can see, this area is still fresh. We haven't yet tapped it. So it's your potential target, and then this low can be used as liquidity, right? But for those of you who would like to get in with a proper confirmation, you can basically just scale down to lower time frames, right? Lower time frames, I would say, I'm not really sure where this day started. Let's see, the 12th, Friday already tapped here. Let's go to lower time frames. I just want to make it very simple. Let's see that this started here, right? 15th. The 15th tapped the area of resistance right here, the daily resistance, right? This is today. Is it today? Today is the 15th, right? Am I wrong? Yeah. So we tapped this area right here. I'm basically just waiting for this candle to close. We'll talk about that in a few minutes. So our focus is right here, right? Let's say you didn't want to enter with a 30 pip stop loss, right? Because that's a high risk trade. You basically just scale down to lower time frames, depending on whether you're comfortable with it or not, right? Depending on whether you're comfortable with it or not. So you could have either decided that, okay, fine. We tapped this area right here and then rejected, right? We did not really see any breakout. Then price pushed a bit higher, traded lower, and then pushed a bit higher to tap this area of resistance. You shouldn't use it because there's no breakout yet, right? But then after reacting from here, it broke out from this area at this move. Hold on. Just want to quickly confirm something. It broke out from this area with this move. So first area or first entry, you could have taken it from here, right? If you use the line chart, let me just quickly show you. If you use the line chart, where is that? Hold on. You'll see the breakout right here, but it's not really a breakout because of, I would prefer close below here. I would prefer to close below here, but based on the candles, based on how it reacted here, you could have just decided to enter, but still not a very safe trade. So in this case, what I did, I just marked up these areas right here. And remember, if you're not seeing anything clear, remember we tapped the daily area of resistance, right? So this is enough reason for you to look for lower time frame confirmations, because you know we tapped a higher time frame area of resistance. So you can just simply go to lower time frames just to confirm your breakouts and all that. So let's say after it broke out from here, right? You went to the M15 and then you saw it trading a bit lower, making a high, and then we got a breakout from here. Your first entry obviously had to have been here. Had to have been here with the 30 stop loss. With the 30 pip stop loss or 35 pips, depending on what you're comfortable with. Your target here, right here, 300 pips, just like that. So this would have been your potential first entry. I'm just showing you these setups on lower time frames, but I hardly ever use lower time frames. So let's just say this is the breakout right here. Maybe your second breakout would have marked it up from here, and then the only area that you would have had here is this open close, because this area right here, this area of resistance has been used. So second entry, you could have marked it up from there. And I know that this is hindsight, because I know some of you will be in the comments, oh bro, this is just hindsight, you don't even know what you're doing. Another area right here, I think this one, let's just zoom in. You can see this one, this buy and then sell has been tapped, so you would have just decided to use this open close, because you have to pick out the top two areas that you want to sell from. Just like that. Target right there. So right now I'm seeing the same thing right here. I'm not really sure if it's gonna come back or not, but I was waiting for price to close on the 1 hour. If we go back to the 1 hour, you'll see on the 1 hour we have this open close right there. So we can just simply wait for price to retrace into this 1 hour area, and then we get a possible sell continuation. Oh man, a possible sell continuation, targeting here, but my main target is obviously around here, and I think I did discuss it, but I haven't yet made any video regarding that. So yeah, that's basically just a small breakdown using Malaysian SNR. So if it's something that you're interested in, make sure to watch some of the videos which I did post on here on my YouTube, or yeah, just basically just follow me on Telegram, the first link in the description. And yeah, I'll talk to you guys soon. Love you boys. Let's see, how do we stop this, man? Anyway, this is not financial advice. Anything that you do is basically your own risk, your money, your own growth. I did not tell you what to do with your own money. I'm just speculating. That's only for educational purposes only. So anyway, with that said, peace. Love you boys.